So chapter 14, we're going to be going over financing, okay? So in chapter 13, we spoke about what a mortgage is, okay? Now what we're going to talk about is this. We're going to talk about the different types of loans. So I will tell you this. It is not as important for you to understand every different type of loan, like an interest only, well, also known as a straight note, knowing the differences as far as a wraparound mortgage, which really is never used in practice, and all these different things. You have package mortgages, blanket mortgages, things like that. I think that those are great things to know after you get some of these basic concepts down, because I think that a lot of people, a lot of times, run into situations where they start doing a lot of this information and a lot of this stuff. And what happens is they don't get a good foundation down as far as what some things are before they start going into the more complex minutia. So really what I want you to focus on today is understanding these several types of loans. We'll talk about a conventional, we'll talk about an FHA, and we'll talk about a VA loan, okay? And what else we'll talk about too is this. We'll talk about what a point is, okay? And we'll also talk about what loan to value is. So we'll talk about a bunch of things that have to do with financing. So let's get some terminology out of the way, all right? And I think one of the biggest terminology that trips people up is, what is loan to value, also known as LTV. So what is loan to value? Have any of you guys heard of this? Do you know what that is? Let me know in the chat if you want to take a stab at that, as I take a sip of something. No takers on that one? All right, let me tell you what it is. It's literally what it sounds like. It's the loan as represented as a percentage of the value. So what happens is this. Let's say I had a home that was valued at $100,000 and my loan was $70,000, okay? Then what would happen is we would say my LTV, or loan to value percentage, is 70%. You see how Stu worked with some real simple numbers there so we could do some math in our head? Okay. So basically it is the loan as represented as a percentage of the value. So let's identify what the value is, because I think that's super important too, because people always get this confused. Okay. Value in a loan to value amount is going to be represented by the sale price or the appraised value, whichever is lower, okay? Whichever is lower. So that is exactly what happens there, okay? You have value is going to be represented as the sale price or the appraised price, whichever is lower, okay? So what happens is this. That's why you'll hear some people say, oh, my home under appraised, gee golly willikers, okay? And that is basically what happened in that scenario, is the home appraised for less than what it sold for, okay? That's usually what when they say it under appraised, that's usually what they're referring to in regards to that. So that right there is loan to value. Does that make sense for you guys? Okay, because you will see that, as that's going to be something that's going to come up in a lot of different things, especially when we start talking about all these different types of loans and stuff like that. Okay, so here's what I want to also tell you. When we talk about these loans, it's a lot simpler than you probably think it is. So when I'm going to talk about loans, I'm going to talk about an FHA loan first. Who has heard of an FHA loan and wants to take a stab at what that might be? Who wants to take a guess at that? And none of my mortgage people. Some people say first-time buyer. Okay. Maybe. Okay. Someone said a federal housing loan. Okay. Possibly. Okay. So this is what happens is the federal. Listen to me as I'm the federal. Okay. I want to say I'm having a dyslexic moment. So my mortgage people, Federal Housing Administration. Thank you. Yes, I had. Wow. Okay. I definitely Housing Administration. I don't know why I was having a dyslexic moment there for a second. I had the word on the tip of my tongue and then it just didn't come out. So I'm sorry about that, guys. The Federal Housing Administration insures these loans. Okay. So why would someone want to get an FHA loan versus a conventional loan? Okay. It is a great, fantastic question. Buyers, okay, and the reason why some people say that this is a first-time buyer program is buyers, okay, actually let me refer to them as borrowers, can put as little as 3.5% down. Also, what happens with an FHA loan, this is usually going to be a loan that credit challenged individuals will be able to qualify for, okay? Credit challenged individuals would probably be able to qualify for this a little more easily than some of the other financing options that you have, okay? So an FHA loan is insured by the Federal Housing Administration. Now, let me ask you a question. Does the FHA lend the money? Does the FHA lend the money? Are they lenders? Someone said no. No, no, no. No, they're not lenders. Yeah, great, 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 great. And people get that confused. They think they're like, oh, the FHA lends money. They do not lend money. The FHA does not lend money. They insure FHA loans. That is their prime, their basic, their reason for existing, okay? And now here's the thing. Who do they insure? Let me ask you that. Who do they insure? Do they insure the borrower? Who do they insure? They said it was they insure the lender. Yeah, and here's the thing. Because they insure the lender, so here's what you have to understand. They're going to get the lenders, okay, are basically taking a risk, right? They're taking a little bit of a risk when they're taking out a loan for as little as 3.5% down, and they also take on these credit challenged individuals. Hey, now, that's a risk, and the only reason they're taking that risk is because the Federal Housing Administration insures the loans. Okay, so that's the answer there. Now, FHA loans do have something called MIP. Okay, who knows what MIP is aside from my mortgage geniuses? So I'll tell you what that is. That stands for mortgage insurance premium. Now, there's minutia in regards to when you would have to be paying as a borrower mortgage insurance premium, but it's similar to PMI on a conventional loan, and we'll talk about that in a second. But MIP is simply the abbreviation, the initials that they will use for mortgage insurance premium. And all you need to know for the test is that FHA loans do have mortgage insurance that has to be paid for by the borrower. There's two components to it. There is an upfront cost, okay, which will be paid at closing. And then there's an annual premium broken down monthly that the borrower is going to pay as well, okay? And mortgage insurance is simply additional insurance that a borrower has to take out to further protect the lender against default, okay? And I'm giving you a very broad stroke of the pen there, okay? But again, what I want you to get down in these scenarios is I want you to have the basics down first. Then you could look more into this chapter and say, okay, let me look at what a wraparound mortgage is. Let me look at what a package mortgage is. Let me look at what a blanket mortgage is. I need you to get down FHA, VA, and conventional loans first. Then you could move on to the other things. Because here's the thing. The more important thing for you is to learn these, because if you get a mortgage question, it's going to be more than likely around words like conventional, FHA, VA, okay? What does the FHA do? Why would you want to get an FHA loan versus a conventional loan? Why would you want a conventional versus an FHA? All those kinds of things. How do you identify these things? So once you get that down, then you could move on to other things. So let's talk about a conventional loan. A conventional loan is any loan that is not FHA insured or VA guaranteed. Okay? So any loan that is not FHA insured or VA guaranteed, so basically what you're looking at is you'll take a look at a loan and you'll say, hey, is that an FHA loan? Is that a VA loan? Yes, no, maybe. Okay, if the answer is no, it is not FHA insured, or no, it is not VA guaranteed, then the situation is this. It is a conventional loan. It is a conventional loan product, okay? So that is a situation in regards to what a conventional loan is. Now, conventional loans, so what people usually say to me is, oh, that's the normal loan. It's not necessarily normal. It's just simply not FHA insured or VA guaranteed, okay? So what happens is that's how we classify it, okay? You go to probably the same place. Now, there are lenders that specialize in FHA loans and VA loan products, things like that. There are lenders who might be more apt to deal in those spheres, but most lenders are going to deal in all of those as long as they're approved FHA, VA lenders, okay? So basically, you don't go to a special place for FHA or VA loans. You could go to Wells Fargo and apply for a VA loan. Okay, you could get an FHA loan. Okay, as long as they're FHA lenders, FHA approved, you could do that. Now, if you have an 80%, okay, if your loan to value is greater than 80%, you must pay PMI. Okay, PMI is private mortgage insurance. That is I'm not going to say the same. It is similar enough to MIP. As far as what you need for your brain, okay, what you need your brain to understand, okay, is that it's similar enough to that, okay? It's similar enough, all right, that I don't need to really differentiate it right now in your mind because, again, need to get you to understand the basics right now, all right? A VA loan. VA loan is for veterans. Now there are there are certain qualifications you have to meet. You have to be honorably discharged. You have to have had a certain amount of active service duty or reserves service. And once you qualify, so I would say qualified veterans. And it has to be owner occupied. So meaning you cannot basically go out and take out all these VA loans. The VA guarantees the loan, okay? And they guarantee basically like up to 50% of it. That's really kind of what you would need to know there. And what's great about this, like why would you want this if you're a veteran? Zero down payment requirement. So here's the thing. When I say zero down payment requirement, that means you do not have to put any money down, okay? So in that situation, you would have something where you could actually do 100% financing. Also, there is no mortgage insurance. Why is there no mortgage insurance? Well, the VA is guaranteeing the loan to the lender up to 50% in certain circumstances. And the lender's like, yeah, we really don't care if you bring any money down. The VA is guaranteeing this for you, so knock yourselves out. So you have to be owner occupied. It's zero down payment requirement, and that's the story there. Now, any questions on anything that we've gone over so far? So far, so good. Okay, awesome. I haven't broken your brains yet. The next thing that I want to tell you is this. 1 point equals 1% of the loan. You will see points in several different places. You will see it in math equations. You will see it in different other places where you might have, where they might be putting down a point. Sometimes it's to buy down the interest rate. What does that mean, buy down the interest rate? Basically, you can, as a borrower in certain circumstances, buy down the interest rate, make your interest rate lower by paying a point or multiple points, okay? And that would be 1% of the loan, not of the value. So if we had a situation like this where there was a $100,000 value, okay, meaning that it was sold for $100,000, and then the loan was $70,000, what happens is the point would be off of the loan amount, okay, not off of the value. Point is always based off of the loan amount, no matter what you're talking about. Sometimes there's origination fees where a borrower has to pay a certain amount of points to get into a certain program that a lender has. There's a lot of different things. But again, for this chapter, what I want to make sure is that you have these fundamental principles down. If you do, then you could start getting into the nitty-gritty of all the different types of mortgages, but not until you have these basic principles down. So I'm going to stop my recording now.